Hello, this is Flaming Profits. Here in this video, I'm going to discuss how to invest in the stock market and why you should. We live in a time that this is much simpler to do. Being able to invest in the stock market used to be something limited to the wealthy and those who were privileged, but not anymore. Because of this fact, it is simply a lot easier to do, and just because of that fact, you should take advantage that now you can. To explain why you should invest in the stock market, it is best to examine what wealthy individuals do versus those who are struggling living paycheck to paycheck. A good book that examines this topic deeply is one called Rich Dad Poor Dad. It is the best book that I've ever read when it comes down to learning about the differences of the wealthy versus those who live paycheck to paycheck. To put it in simple terms, it is best to examine what the poor do with their money versus what the wealthy do with their money. To be similar to someone else, all that you need to do is simply do what they do. Take the actions that they take, listen to what they do, learn about them, and study them. I'm going to show you a few examples of what poor people do. So it starts by they make purchases on credit cards and they do not pay their bill in full at the end of the month. This causes them to pay more because credit card companies charge you interest for unpaid balances. They also buy things for temporary pleasure. There are a million of little things that people buy just for immediate pleasure instead of waiting to get a better price or deal. Impatience can bite you in the long term. They also lease to own expensive vehicles that they can't afford to pay in full, which causes them to have to pay a bill in every month with interest fees charged by the dealer, and there are even worse financial consequences if this bill isn't paid on time. It might seem cheaper to lease a car in the short term, which is the easiest perspective to see, but it's actually cheaper to buy the vehicle in full. They also spend their money on liabilities, things that cost them money that do not go up in value. They pay for quantity rather than quality. There's this quote that I really like from Jim Rohn that says, "A wage will make you a living, but profits will make you a fortune." Now, what the rich people do, they spend their money on assets, which are things that make them money or go up in value over time. They pay themselves first. They invest in themselves. They own businesses. Realizing what I've been discussing, I want to show you one way that you can start buying assets, in other words, things that will make you profits, by you spending your hard-earned money into and in turn will pay you money. It is simply making your money work hard for you, just how you work hard for your money. Instead of spending your money on liabilities or just saving it, which depreciates the value of your money over time, you will be using your money to make you more money. Stocks are basically shares of companies that you can own. You can invest in the stock market by buying shares of any company that you want that is publicly traded. There are private companies that you cannot buy shares of, so it has to be a publicly traded company. Different stocks have different prices for one share. For example, one share of the company Coca-Cola costs around $46 right now. That's 46. If you had bought one share of Coca-Cola 5 years ago for $38 and you had sold it right now, you would have profited $8. Now, if you had bought 10 shares instead of just one, it would have costed you $380, and instead of only profiting $8, you would have profited $80. Your profit increases the more shares you have. but if the stock price is lower than what you had bought it for, if you sell your share, you will lose money. But you do have the option to sell or to keep the share until you decide you want to sell it. Since it started in the stock market, the earlier you would have bought, the more money you would have made, because this is a type of stock that has always gone up in value, meaning it's a no-brainer for you to own it right now. This is the same thing with Google. It's an uptrending pattern that is constantly trending up. So by you simply investing in good companies like this, your money is guaranteed to grow, just like the graphs show. This is Apple stock, and the same story here. You can also look at the balance sheets, which tells you how much profits they're making, how much debt each company has. But simply just by looking at the graph, it's usually enough at the max chart. This is Facebook stock, another very good stock to own. Right now it's a little undervalued, but it's always gone up in value. That's why I recommend this stock. And for example, this is a bad stock. Snapchat, if you look at the stock, it has gone down in value through the max chart, so it's definitely really simple. As you can see, this will not be a good stock to invest in,
but the most important thing is to get started.
Going down in value, and
there are many strategies to invest in the stock market successfully, but I don't want to go in depth in this video, so I recommend you to watch my other videos. Anyways, thank you all so much for watching this video. I hope you learned something and that I provided value for you. Feel free to subscribe to this channel for more investing videos. Please give it a thumbs up and comment if you have any questions or advice. Thank you all so much for watching, and have a great day.